Hello guys, welcome to a Train Parrot. Happy Monday. Dead cat bounce or are we going lower? Let's have a look. Some charts are saying that we are facing heavy resistance, that the bears are gonna defend the thesis of continuation to the downside. We're gonna have to see if the order book is showing any signs. General markets were the boss on Friday. That is what dropped the price of Bitcoin, so we will look back into what's going on in that area as well. We are riding at the moment a small long. I'll give you an update on the position, how I'm planning to react if things shift anytime from here. Guys, if you like this type of content, make sure that you are subscribed to the channel. Hit the notification bell to get notified every time I put out one of these videos. And thanks so much for the 5.8k views on this video. I thought I might have gone a little bit too far with the arrogancy and the black humor, but it seems that most of the people prefer that. Otherwise, I will have got probably half the views. And since I had a lot more fun being an asshole, I'm gonna continue to do that approach that you like so much. If you consider that a pity, I don't care about you. We will see what's coming on next week. We can see that people are voting for a V recovery in an all-time high. So be careful, because typically the guys that vote the most for the option that gets the most votes, that tends to not be the case of what we get. The second option in here is sideways, and the one that is getting the least votes at the moment is to continue down and fast. I personally don't care and don't know what's gonna happen. I have my position, my bias based on probabilities, and let's say that I tend to be on the right side. So if you are hit to know what I'm gonna do next, stick around until the end of the video. And I'm hosting this trading competition on 2bit. There's just 21 days to join and to be part of the $3 million that are available in the pool for us to win if we all together as a community make the best trades. And I'm gonna make sure that I'm not just gonna share the trades that I'm taking, but I'm also gonna highlight trades that I'm not willing to take because I don't have time to scalp. Sometimes with my lifestyle it's just incompatible, but I will make sure that you know about those deals as well, so you can take advantage and be part of my team as well. Make sure that you have an account, of course, on 2bit. They're gonna give you $50 anyways for free as soon as you open your account, and if you start depositing your own money and trade, you can get up to 30,000 in trading bonuses as well. So open the account and then click register now to be part of the event. Martin is saying lots of people asking why do dormant wallets matter, and I think it's a fair question, because last week we had half of my audience saying that it doesn't really matter how much they deposit, that it was already distributed and stuff like that, that we shouldn't really care. Dormant wallets matter because when all whales move, it often signals distribution. You can see in here the red areas are typically closer to a top. It is very ambiguous as well, because for example in 2017, pretty much for half a year they were distributing, retail was very persistent, and thanks to that the period of red expands all the way into 20k. The next cycle they did it just in this area in here. They wanted out very quick. Notice that in the second all-time high they will have already distributed what they wanted to distribute, and that's why we don't see red there. In this cycle we are getting 3 different instances of big distribution: at 73, right when we cross 100k, and in the most recent price action as well. In terms of news, we have Metaplanet doubling down on Bitcoin with fresh 54 million purchases. You may wonder, why do we care about talking about 54 millions in trading in a day? Probably there is a $500 million anyways, and this is because these are companies that are publicly located in different countries, and is signaling that we are going in the right direction. More of them to mimic these moves, and we could get a supply shock. That is what public is focusing on at the moment, and is catching most of the bullishness in terms of the news, which is what we are covering in here. Notice as well that I'm not going to trade the news, right? This is the grass for the cows to chew, not for ourselves. We do data driven in this channel, and we're gonna look into the data that actually matters. This is just grass for the cows. Let them chew on it all night long. After all, that's what cows do. Spot Bitcoin ETFs see 800 million net outflow, second largest on record. Yet that happened on the 2nd of August. It's a little bit old already, but it got a 4 out of 10, and we need to keep an eye on that, on the effect of the bearishness because we are about to reclaim some support, test some new resistance. The order book, guys, is getting heavy to allow us to reclaim important levels. We'll see how that develops. Of course, if the general markets on the market open signal some V recovery, crypto is gonna follow as well. So stay for the analysis of general markets too. 6 out of 10 is this one. Bitcoin steadies near 114k as the federal rate hopes lift risk appetite. Let's get a little bit of mate. That's what you should be drinking if you're gonna trade anyways. It's good for you, it's good for your little body down there as well. We got some questions in my community. You can join my Patreon community with the link in the description. I really like when I wake up in the morning and I see the questions. They really give me great ideas of things to cover. People want to know if the bounce is over. They're mentioning the selling wall, which we are gonna cover definitely, and the CME gap that this morning got me scratching my head. What the hell happened with the CME gap? We're gonna look into that in just a second. Over the weekend, the open interest decreased a little bit more now, is sitting right at the support. That is the previous resistance. And of course, we care if we drop below 38 billion because that could mean that Bitcoin could also lose the next level of support. And pretty significant, but August is now sitting at roughly minus 1% for the month. Of course, we are just a fourth of August, but you need to think about the impact of the red pattern in the brain of people on a Monday and also on general markets doing something similar. After all, we've been 4 months in a row with an upside and we are approaching an area where either August or September we get some red month in preparation and making some room for a positive October and November. Of course, that is just past performance, and I wouldn't say that we got guaranteed the pattern to play out in that manner, but if it doesn't play out, worst case scenario, we're just gonna see it upside down. What do I mean? Well, the worst case scenario for me is that August and September is positive and then we get an October that is negative, catching all people by surprise. But let's play it safe and let's say that the most likely scenario at the very least is an August or a September in the red, or both. CME, let's see. We closed around here at 114 premium CME. On Binance that was 139, but at the Monday open we started already moving up. So that kind of qualifies as the gap is still open and we could say below the price, right? It is just a thin air there sitting at the same price I just said. That could attract the price, but probably as I'm editing the video is gonna get already consumed in here to the downside, so it's not gonna give a lot to say about it. Let's look at the Bitcoin status. We have the 4-hour global breakdown reclaim. In the daily we have the same, and because of that I have to upgrade 4-hour and daily to gray, which is neutral. Yesterday we have it in red because if we didn't reclaim those levels we could have faced heavy downside. I'm talking about going into 107 or so. So does that mean that 107 is completely ruled out? No, it just means that the reclaim at the moment is giving us an additional probability that we could go slightly higher at the very least. So let's look at how this is developing on the 4-hour RSI, that double bottom that we identified yesterday, that I said, well, we need to give headroom for this to potentially expand into the next resistance. That is precisely what we have done. And no, I didn't do a forecast. I don't do forecast in this channel. I did not know that we were gonna go into 48. I only say that we have a chance to go into the next resistance, or we go into 110, or we go into 107. Oh, genius, so you just discovered that price can go up or down. No, I was in a long at the bottom of this, waiting for this to expand, and now I am slightly at break even. So if this breaks out from here, I'm positioned in an advantage because now I'm already invested, and if this starts breaking out, I take profits. It's a small position and I will count victory once again. Now, if this resistance rejects my position from break even back into not being in profit in the red, then we look for the 110 and we continue to execute the plan. This is not about showing off being right. It's about reading the probabilities in the right way so you can always profit. Surprise, surprise. You're here to make profits. You are not here to be right and to read the future. Why? Because you cannot. No one can. So stop looking for channels where people claim that they know what's going to happen, because those are the first ones that you need to unsubscribe. You need to look for channels that do a good reading of probabilities and keep you most of the time in the profits. And this one has kept you 1 year in the profits. Oh, you haven't been watching this channel? Okay, maybe it's time to make some decisions to clean your YouTube channel, unsubscribe all the crap, and just keep the focus to the ones that are teaching you. Maybe this one. All right, I think I need another sip because I am getting a little bit spicy already and I need to swallow that. So we are on the RSI facing resistance. Hopefully we break out and we take profits from the longs. After all, there's been a bunch of signals. These percentile signals are all over the place. We form a double bottom. Okay, we complete it. So we got a chance. And on the price, we are hitting now resistance. That was the previous support. The lowest level of all that trading range is currently being tested. If we can reclaim that, good for us. We are already in a long and we can go and hit fair value gaps, bottom of the range. If we get lucky, 117. If we get extremely lucky, okay, I'm not counting on that, but if we get extremely lucky, we could get into 122. And since we already have a long, good. Chi-chin, chi-chin. If we get into 130, even better. But to be honest, my position is not that big. So personally, to be completely honest, and this is just a secret, I would love to be wrong on this long. I will love this to fail against that resistance, because then I bring in the heavy artillery, or whatever is pronounced, la artillería pesada en español, and then we get some additional size here at 107. That will be phenomenal. If we don't hit the 107, fair enough. We ride the wave long, we try to let our winner ride, we put just some trailing stop loss, and I continue to update you how I'm doing that in my Patreon community. Do you want to get notified how I do that? I rarely make any changes, maybe once a week, but for $10 a month, you are part of my community in Patreon and you already get notified everything to do with Bitcoin. If you want altcoins as well, and if you want to be part of the private TA sessions on Thursday, the Pine script as well, get elite. And that's how you support this channel and everybody that works with me. Let's go into the CPR before I make another over an hour video. You can see that we are currently also testing resistance with the pivots. Pivots are the strongest resistance within a month. We need to be, humble when we approach it from above, from below, because it's tough to beat. It takes usually a bunch of tests before actually breaking it. It used to be the previous support. Now it could turn into the next resistance. Now, if we get rejected by this asshole, it could send us straight back into 106, which will be really good. I'm not gonna complain. If we lose 107, we got 96 and 88 that we need to deal with in the month of August, which we just started, and we have the new levels. Now, if we reclaim the CPR, we need to say hello to 124 and potentially a new all-time high. Are we ready for both? Yes. Check boxes. Small position below, already entered below the pivots. Yeah, it's there. You are sitting on your hands. Okay, no trading here on the pivots against resistance. That is not an area to enter. Do you feel itchy? Okay, let me help you. Okay, put your hands down and don't enter against resistance. That is not something that is allowed in this channel. If you want to do that, go to another channel that they are going to encourage you actually to trade resistance. Right, we have another resistance coming in on the daily, and we are in the process of reclaiming it, which is extremely exciting. But we need to really put a candle back inside the ascending wedge. Otherwise, we are just testing the puke to the downside, okay? Watch out, because general markets at the moment hold the last word of what we do in this pattern. If general markets say, no, like my daughter tells me now, she learned to tell me off, and she's been telling me, daddy, So if general markets decide that we are not going to enter this pattern, it's just going to tell crypto, and after we get that, we just puke, right? If we reclaim in here, we have a chance to fool around in this pattern. But let me tell you one thing. I do not like being trading within this channel because this is a bearish pattern. We have gotten lucky a few times with Bitcoin in the past year where we had this sort of ascending wedge and the price did this. Not so long ago. I don't remember. I think it was within the last 3 months. And I was really shocked with that price action. So So that means that it can happen, but it's low likely. It's very rare that we get those events. Could we do a sideways in here? That is more likely. This is more likely. This is less likely, but it's still possible. So on the 4-hour, you get the reclaim of the global support. Great, with a double bottom. Great, with loads of signals of volatility peaking in the 4-hour and potential to do some damage as we try to reclaim and potentially manage to. On the daily, we also have a reclaim. That is a reclaim, and we have a daily close with a confirmed reclaim. Now, what do we need to do? We need to form some double bottom formation, some pattern that says, hey, we are regaining strength at around resistance and we might be able to reclaim it in the price as well. Momentum says we already did. Now, if this fails in here and loses the green again with a lower low, very likely that we're going into 25.84. That is at the moment price at 102 at the moment. Remember that the previous week low was 114.8. That is the level that we are currently facing as a resistance right there. So watch out for that level, is still important. And there is a lot going on in the order book. We need to go into that before we finish the day. The weekly close looks to be still holding the previous resistance. You can see in here that we couldn't put a higher price than $112.70, and that's precisely where the weekly found support. Very interesting level, and now we need to see if that's gonna hold that support. Of course, price is gonna want to reclaim 117 starting with, and then put higher highs relative to 119, and ideally go for the all-time highs. That is in the schedule for the bulls. If they want to repeat this particular pattern, is very repetitive in price of Bitcoin. You come back to the previous resistance and you just test it. Here you have it as well. In this area we didn't do it, we came down just to there, but we could be seeing the same pattern, right? So this is the resistance and this could turn into support, in which case we could maybe still continue into the highs on the weekly. After the previous week we confirmed the bearish cross on the stochastic, and now we are just settling that signal because the mouth is opening even wider this week in intracandle. Of course, if this week we have a huge pump, then this is gonna reclaim around 80 or higher and send us back into the next resistance that we have already tested. At the moment, that resistance is more or less located at 71.22. So let's update this like that, and let's see where is that located. That is giving us at the moment $128 and $500, give or take. Longs are starting to come back in from the percentile levels that we covered in yesterday's video. Do yourself a favor and watch this video, either for the comedy in black humor or because of all the alpha that is in there that I'm not gonna repeat in this video. You're gonna thank your future self. SOPR, pinch this band. If you wanna know what that means, watch the video from yesterday. If you don't have 1 hour to watch the full video, at least I scrolled through the timestamps to understand what you missed. And if there's something that stands out and you wanna know what it is, just go straight and click on the timestamp. We are in an area of huge distribution or deposits from large holders at the very least into exchanges. So caution is all the time recommended, advised. The firepower of this thing is pretty decent, guys. This is over 100k Bitcoin that people presume already distribute, but I do not presume it as already distribute. I have a huge respect for levels highs in Big Well Explorer. If you decide not to have that respect, do that at your own risk. We started the month with decent distributions of 800. That's the largest that we have seen in a while, and that to me signals a little bit of a shift in sentiment, right? It could be just a bear trap, fair enough, but based on seasonality and based on all the things that are currently going on with the tariffs, with the labor, we just had a little bit of a multiple source of events that spooked the market in one go. We settled the weekend, Sunday, we settled at around this level on Cerberus. This is tracking in a stochastic way the ratio between stable coins and invested coins, and it's been a phenomenal indicator. And I'm gonna give you a quick update because we are on Monday, so we got this sell signal. This sell signal is not settled. We need to wait until Sunday. If the price remains at these lows, probably it's gonna stay here, but if we start reclaiming levels and going beyond 120, we might delay the sell signal to weeks after. But the interpretation of being in in here is kind of a mixed bag because we are in a bull market. In a bull market, the sell signal tends to be a buy signal. Let me explain why. Usually you get the golden sell and the warning sell as we pump. Then we get bearish divergences and we get the first puke candle in red, the first engulfing one, the first technical thing that confirms that that is high likely a local top. At that point, usually you get the sell signal. But in a bull market, people buy the dips. So after you get the signal, people get very excited and all this area in here up until 89, they buy the dip. Therefore, you get a higher high and then you get the actual puke. You have multiple outcomes that you could expect after a sell. This sell signal in here got bought up and put a new all-time high. So pinch of salt on this signal. We are still in a bull market and this sell may or may not play out. The one that I do care is to look for exits from golden sell into warning sell. The sell itself is going to eventually become the best signal ever once we enter into a bear market. This one got confirmed around the third candle in here and it's a bear market. So we need to match it with other sources of information. We cannot just use this by itself because we do not know if we are entering a bear market from this candle. If we are, this is going to turn into the best sell signal ever. If we are not, it could be a buy the dip opportunity. So how do I trade it? Well, you know I'm taking a long. If you've been skipping part of the videos, go back to the beginning, but I say I am in a long and I'm in a small long. So if I'm wrong, I have some headroom as well to react. In terms of liquidation pools, we can see the 107 continues to be the higher in the close proximity, but we have some areas where we could consider offloading some of the long if we start pumping. Based on liquidity pools, there's nothing very close. We're going to have to drop the time frame when we look at CoinGlass as well to see if we have some interesting levels in here. And 120 definitely is the most interesting one, but I'm not sure if we are going to get that high. In the longer term in liquidation pools, we continue to have number 2. After we hit already the 114 that was pending right there, the next one is 107. Let's look at the 30-day in here. 120 is the boss at the moment in terms of liquidity pools. Everything else is very shallow, very low in terms of peaks. Price is at 114, so let's say if we go 4k lower into 110, that's a cumulative of 378. If we go to 118, that's 4k up, that's 341. So there is quite a balance in the 4k up and down at this moment, slightly heavier to the downside, but not by a lot. Liquidations over the weekend were not that big indeed. Just in the beginning of the weekend, end of Friday, we saw the most. After that, it became really flat. On FAR charts, let's have a look in here. We can see that, well, most of the liquidity is asked. Purple whales are not waking up from what they did up until the end of Friday, which they were long and then they rag pulled. All the other cohorts were suffering thanks to them being right. And we have some resistance coming in at 118, 120, 25 and 30 are all heavy. The heaviest is 125 with 46 million. Around here, there's 37, 118, 30, and the support is 30 at 109.9. Let's see how the order book is looking. You can see that they are running away from the price with the orders. Now they are repositioned at around 115. Starting from that level, things peak at 116 on perpetuals. On the left-hand side of the chart, I have perpetuals. Support is somehow decent at around 112. There is a cloud in here at 110 as well. Zooming out, we find some levels at 125 and something in here at 107, which are also significant levels. On spot, let's see where is things. Well, they want to distribute spot at 125 clearly and at 120. They want to buy at 110 and at 103. That is kind of the gap that we are seeing between spot and perpetuals futures. And this chart is very important. You can see that we left past week point of control at 118. And the most traded area was around that level right before the puke. So if we got lucky and we started moving up towards the liquidity of 120 where we had that liquidity pool, watch out with that resistance of 118. Let's see if that rejects us. Why? Because that's the point of control, the area most traded. Think about this. How many people still are riding along at 118 that are now bleeding? Think about how many of them, as we approach the area of break even, are gonna say, oh, I was very deep in the shit. Now that I can breathe slightly, maybe I wanna take a dump in here, take a small loss and call it before my wife slaps me in the face with a shoe. And yeah, the effect of the shoe could be real if we get there. It's not that you have to get there and sell, but if we get there and you see that there is too much weakness and you decide to take some profit, to cut some from it, that is fine. A win is a win after all. Let's look at High Block Capital. I'm organizing a stream with Vinny. He's one of the founders of this platform that is magnificent. Let me know in the comments if you have any questions for him, or join the stream that we are planning to do tomorrow, probably around 3 p.m. UK time. If not tomorrow, on Wednesday, we'll see if we can get it sorted. And I'm gonna get, during the stream, I'm trying to push to get a big discount code to last the whole week, but maybe it's just gonna be a big discount code only during the stream. So if you're planning to get yourself into High Block Capital, which I think you should, I use it every day, and you want to take advantage of that, do not miss the live stream. We have some liquidations that ends at 116 coming from all this move down in here. We are partially consuming them. We have negative funding raise as we were coming back up in here. Those were shorts that were thinking that we are not going to break out from the double bottom, but we have done so far the breakout. So these shorts are now at risk and their liquidation levels are around here. We also have liquidation levels at 121. In terms of the ask versus bid, it's a mixed bag at the moment, guys. We have slightly red this morning, very close to the price action, 1 to 2% deviation down. You can see that is also in red. That means that there are more limit orders above the price than below the price. So that is a little bit bearish because people want to take shorts from slightly going higher. Things shift for the 2-5%. At that point, we have a little bit more decent support. 5 to 10 is back in the red. 10 to 20 is flat, and 20 and below is red. And I think that is the influence of those levels at 125, which is now more or less 9% up. So I guess this 125 plus the 126 are shifting things from 10 to 20 and showing that the ratio is in red because they want to sell in here more than they want to buy on the other extreme. Order books at market open tend to shift very quickly. So if you're watching the video at that point, this might have already changed. At the moment, you can see that all these percentiles are very dark in this area. That means that we have percentiles very small in terms of defending the support. Mostly they are allocated to sell, which is in confluence with the other indicators. You can see the deviations 5, 2, 1, and 10 to understand where are they located. Like for example, 5% below versus 5% up. We got dark color. That means that there is a lot of defense, 5% around that area. In terms of delta, we continue to have the shorts at higher risk. Let's see what is that figure. Is 500k, so that could be fuel enough to continue moving higher a little bit more. In terms of where the open interest entered these days, that is always a very interesting alpha that we want to be very informed. So let's reduce this to more or less like that. At that point, we have 500 million. Here we have roughly 600 million. Those are the two biggest levels of open interest, and I suspect that they enter with shorts, and that could hunt them, right? We could go into 120, 118 and take that open interest and close, put things back in equilibrium. At 109, we have another level with 400 million. That I suspect was the responsible for this pump, so price could chase with a wave C easily that level, right? We move all the way this way in here, so if this turns into a dead cat bounce that cannot break this level or cannot break the 116, if that turns into the final nail in the coffin, confirming the dead cat bounce, easily you can reach 109 and hit it as a C wave from Elliott waves. We had a bunch of signal that I missed over the weekend. This one triggered on the 1st of August. I didn't pay attention to this, but this was a buy signal. Well, luckily we were already in a position around here, so we are exposed enough in case we go higher to take advantage of that long. Let's have a quick look and let's see if the people are starting to get interested in altcoins. We have about a double bottom formation in here. Let's see if this breaks out. If you are allocated during the bleeding, during the worst of the bleeding over the weekend, because you were thinking, no, we are probably gonna bottom around here, I will start trailing those those positions in case we get another wave up with the altcoins, but be mindful if we get that C wave on Bitcoin, because that could destroy this and put the altcoins back around here. This chart is showing you retail, whether they are long or shorts in the last 3 months. It's an average of all the coins at the same time. In terms of fair value gaps, well, being in a long here is not a bad thing. We have plenty of levels to benefit at lower risk. For example, this 115 could be a low-hanging fruit. It's an overlap of a fair value gap 4-hour and daily at the same time. That's why it looks lighter and is the previous support of the closing candles on the 4-hour. We could hit that. It's not that difficult. Here is achievable as well. The 116, we can see a rejection getting a little bit closer to the point of control. That's probably around 118. If we get into the point of control, that could also serve as a rejection, in which case we consume all the 3. So you're saying anything can be possible. I am saying something else. I am saying that we can go higher in these levels and you can protect one by one your positions. How? Well, maybe if you enter at the lows better than me and you are already in profit, you could place your stop loss in profit at around 113.8. And if we take this one, you still wait, you take the second one, and then you move the stop loss somewhere in here. And depending obviously on what shape the price does, it's like if you do something like this, you can say, well, we already cleared this imbalance by going lower from this candle, therefore my stop loss can be placed there. And then I do this and then you move it there because that was already cleared. What you don't do is you see a move straight up and you put your stop loss in profit right underneath the price, unless you really want an exit out from an exponential move as soon as possible. If you're willing to get kicked out of the market quick because you think that this is not really going to hold that long and you want to squeeze the most of the move, fair enough. But if you want to give it room for expansion, you continue to trail at levels where you feel like the imbalances have already been cleared. You're not going to get it right the first times. I don't get it right all the time. Sometimes I get kicked out, but to me, my philosophy is profits are profits. No one is allowed to get angry if you took a profit, okay? Do yourself a favor and adopt that philosophy as well. And if you feel the urge to get annoyed, look for the next opportunity and focus all that energy in what's next. Never punish yourself for a smaller profit. Never. It's not worth. It's better to stay positive. All right, the dollar seems to be pushing higher in here. That is positive. It's still showing that shift in the momentum has potentially some legs. I've seen so many articles saying dollar is seeing an ugly rejection. Yes, this candle hit resistance and saw some rejection, but that rejection is not fully bad in my opinion. It is partially bad because it's a week to the upside and this could come back down into 96 in that sense, but it's not that bad because we put a higher high in the momentum. One, this was just the typical rejection of resistance, we could say. Now we are starting from the high and we are continuing with the green candle, so there seems to be still headroom to try once again to break that resistance. If dollar continues to go in this direction, this is not good for risk off, risk on assets. That could bring in that additional pullback. Gold confirmed the breakout in here, is now going sideways. Price continues to go sideways, but the momentum is starting to put higher lows. We need a higher high in here ideally to fully confirm things, but it's having something that Bitcoin had in the past days. This is on the weekly chart though, but is a bullish consolidation. We reach an RSI of 81 and after that the RSI has come down to 59 and the price of gold doesn't go anywhere. It just retested the 21 weekly and it came back to the same range. So there is a chance that this breakout holds, suddenly surprises everybody with a push into 70, and there you go, you could get another push higher prices. Still manage your risk. If you lose the 21 weekly, be prepared for the, invalidation pattern, something like this. So think where you could place the stop loss for a confirmation of downside. In my opinion, taking this low in here or maybe this one if you want something with a smaller stop loss at the cost of potentially getting stop out and still pumping, you can look at those levels and do your own research, of course. Remember that the VIX confirmed reclaiming support. That is not great for the markets. It tests as well the 21 weekly and it could continue expanding if it remains above 46 on the RSI weekly. NASDAQ and S&P S&P, confirmed the move down. Now we are starting the week pushing up. Let's see if this really can hold that, reclaim 23, reclaim the highs and put a new all-time high at the cost of further bearish divergences, or if we're gonna straight up come back down to test support at 22,000. The analysis is pretty much the same on the S&P. The only difference, you could say, well, it's the same. I'm not gonna make it complicated. We have a red engulfing candle on both. We have the support in this case at S&P at 611. Russell broke down from the M pattern in here on the weekly and is testing the neckline. If it cannot reclaim that, it could come back down probably to the 21 weekly. That's more or less the target of this M pattern. Nikkei is also rolling over. I keep looking at Nikkei because Nikkei has been the source of a lot of panic in the markets in the past year. Somehow it spills very frequently, so I want to be there in case it does something weird again. And yeah, Apple broke down from this support just in time. It's incredible. I was talking about the breakdown of Nvidia and Apple. I wasn't expecting that, Trump was gonna hit it on Friday, but he did, and this caused this move down. Pre-market is slightly higher at 203, but it produced a 6% single candle move back down. And that is just because, Trump still expects Apple to produce iPhones in the US. And they're going to invest and everything. But, being completely realistic, I think we're a little bit late to the game of becoming China in terms of manufacturing power, tech, and all of that. Apple invested so much in teaching people in China on how to do the iPhones. They brought all their engineers to China to teach people in China, and now in China they are experts, and in the US it will take not just an enormous amount of investment to achieve that, but also time. In my opinion, Apple is currently one of the main factors why China has become so rich. Of course, there are other factors, but it's a huge one. You can watch some documentaries and leave comments down below. It's just my personal opinion, but definitely it's going to have an impact in markets in the future. Altcoins are opening quite in the green, and I suspect that people are gonna think, hey, are we back in altcoin season? What's going on? So let's have a quick look in here. We do not have a breakout on others BTC. We are starting the week again doing what we did the past week, which is to test that resistance to see if we are gonna break out finally. And we confirmed the candle of USD dominance against total 3 dominance, reclaiming the neckline of the double top. That is not great. Now we need to deal with the uncertainty of this coming back, retesting the 23% and continuing up. That could be additional bleeding. If we this week come back in here to where we came from, around 21, 22, this area in here, that will mean that this retest was a fake out because it went too high, but in fact we are still on our way to 20% or to 16%. That are my two targets for an actual confirmed altcoin season. At the moment is a little bit more lean towards slightly additional pain on the altcoins. But do not take my word for it. Do your own research, of course. Ethereum dominance continues to respect 12%, but is very persistent in this area. This is a data point that implies that potentially we could get additional altcoin season just because Ethereum dominance hasn't really stepped back down. And we can also see that the USDT plus USDC dominance is reclaiming the lost support. That is a bullish signal. So we are going to have to place this line like this and see if we can get a breakout of the RSI weekly in here. That is not great for the markets. Think about this. USD breaking out in here means things are going into dollar away from the coins. So that is a bearish sign in this case. And the Bitcoin dominance reclaimed the lost support. Now it's retesting it at 46. My hope is that this week the Bitcoin dominance comes back down in here, confirming that that move slightly too long back inside the range is just a fake out, and that we are still due for Bitcoin dominance to come down and allow room for the altcoins to continue up. It's never that easy, guys. It's never that easy. That's why adding into positions is always the best play, not just to say, oh, finger in the air, oh, tomorrow is altcoin season, all my money there, and then, oh, you were wrong. No, you can think about a plan when things go wrong. If the altcoin season starts from slightly lower, if you really think an altcoin season is coming, that allows you to be better positioned and to manage better your risk in case it fails, because you always have to think in the worst scenario as well. Looking at the Bitcoin Bitcoin dominance from this end, I will say that the dominance is still in a state of bearishness. These moves that we are seeing in here, 1-2 weeks, are desperate attempts to really continue that bullishness, and we could see maybe a 63% and still be able to say that this can stay a rejection and downside. I will say that my line in the sand is if we see the Bitcoin dominance reclaim up until, these levels in here. At that point, it's going to be tough from there to come back down. We're probably going to carry on into the next target, which is 69.75 as of today, representing a move of the RSI all the way into this 70.35. Ethereum is still looking pretty bullish. We reached 3.364 this weekend, and right after that we have reclaimed that resistance. So this is at the moment primed for further expansion. And remember, alts might be suffering because there is an order in terms of allocations in the crypto market. It's Bitcoin first, Ethereum second, then top market cap, and then you start going lower in market cap. So if Ethereum is behaving like this and is holding these levels and you're still not allocated in altcoins, that also means that you still have headroom to start allocating the altcoins. If Ethereum behaves in here and it continues, you always have that eye on the expectation that people eventually will rotate out of Ethereum into lower cap by layer, and you wait like a wolf there behind the tree waiting for the ship to come to be already allocated so you can get the next bags to pump. Now the whole plan can be wrong and it can shift down a full level down in a very painful way because this is crypto and it's full of risks. Guys, if you want to have access to my indicators, I'm talking about the Pine scripts, the TradingView ones, you can access them in two ways. Actually, you can access them for free. If you go to my Telegram channel, every single post has a link that says TTP charts. You can request up to 2 TradingView charts a day live with all my annotations and everything. For example, the Big Whale Explorer, Leverage Squeeze, or anything like that. If you want to support the channel and get full access to them via Telegram or directly the Pine scripts, there is a shop in my Patreon. You click on that and you can decide which one you want. If you are a big boss, get both of them. That really helps the channel as well. Let's do a wrap up in here. So we are facing resistance. This is not the century resistance, the most vicious one in history of Bitcoin. Is just a 4-hour resistance. We could flip this into new support and see additional upside coming in here if the general markets are doing great. We have a few candidate next levels that we could hit with our long, starting with 116, the next fair value gaps in here, the point of control that is worth of our respect, located at 118. That is a heavy one, and we are going to look with mouth watering face in here, the 120, in case we get there. If we get big lucky with our long, even if it's a small position with a decent move up, we can take decent profits too. Now, I'm not gonna count on it, so I'm gonna have to trail it up. Now, if we see a rejection from here, we execute the next step in the plan, which is to see if we get strength at 110 or at 107. I do not leave limit orders in the exchange. I always look at the data and see as we get there, I get alerts and I see the alerts and I sit down, I look at the data and I say, oh, this is looking pretty good. I will add here at 110. If I do that, by being a patron for $10 a month, you're gonna be the first one to learn. Immediately on the same day, you will learn as well via Telegram, via Twitter, and in the next video in YouTube. Everything is transparent, and after I take profits, all my articles with the whole journal of every step by step is published to everybody on internet. So you can go and read the previous trades, and if you think that the amount of trades that I'm taking and the information I'm including there is good enough for you, go ahead and join my Patreon. It is not meant to be a signal community. It is meant to be a way for you, just another way for you to learn on how do we map all this data to execution. You are expected to take that away and to shape it in your own way, to your own needs, your own risk aversion. So be aware of that. Do not copy trade me. Thanks so much for watching. Hit a like, write down a comment down below, and I'll see you on the next one. Bye bye.